Hello, everyone. Welcome back to the rationalinvestor.co. I'm Brian, the Rational Investor. How you doing today? I thought, and actually, you just see the tweet just went out, but I thought maybe I'd do another free video here for the public on the stock market. We did one yesterday on Bitcoin. I know we have a lot of crypto enthusiasts. But at the same time, I sure have a lot of people in sort of stock market land that sort of scratch their heads when they see my obsession with cryptocurrencies and especially altcoins. They just look at me and go, "What on earth are you doing?" But anyway, I thought I'd take some time because we did a video yesterday for the Bitcoin community. I thought I'd take some time and just take a quick boo at the stock market. And one darling in particular, Apple computers. So that brings us to this chart. And I don't know whether you've been long-time followers of me or not, but back in my 1980s website, I used to run a blog on the S&P 500. Let's see where that is. Yeah, here it is here. Going back, years. I started this blog actually right before the financial market crisis meltdown. And what's so cool about this, of course, let's see if we can show you just really quickly. We actually had the sell signal right there. You can see this says November 2007. We actually, I did, not we, I did, went out and said, you know what, time to get the fuck out of the US stock market. And of course, we all know what happened after 2007. And it's really cool, right? I can actually just pull up the chart and just show you there was the signal right there, right? November 2007. And all that is just following a sort of time, a moving average relationship that I've found seems to be quite accurate in sort of giving you sort of the general trend of markets. And keep in mind that moving average relationships, that's basically their job. That's what they're supposed to do. And so the long and short of all this is that basically this is a really handy tool. And anybody watching this on the internet, this is something you can take away from this watching this video today, that should, is an incredibly powerful little tool to sort of keep you on the right side of the market. You notice that I'm looking at a weekly chart, not a daily chart, a weekly chart. And the moving averages are the 13 EMA and the 30 SMA. I don't know whether you guys remember, but this market sell signal here was generated. This is back in 2011. That's how long ago this was. And you can see the moving average system got you out here, got you back in here. Basically, it's at scratch. Got you out up top here, got you in back here. And this is the interesting thing about this is basically we came really close, right? They kissed, the moving averages kissed, but they never did cross bearish. The last buy signal was here in late 2011. And look how it's had you long the market the whole way up, right? Absolutely remarkable. So, what's interesting too is that this is one of the weeks that we cover in our level 2 program, sort of our continuation part 2 of the candy store. Our education program covers 16 different individual tools you can use in the market to study and analyze price action. And this is one of the weeks we do is on moving averages. So if you want to learn how to use this and work with me one-on-one to learn how to use this, get your butt in the school, and we'll teach you how to use these kind of tools like a pro. Anyway, the point of the matter here is, in fact, here's another week study that we do. We study Fibonacci. You can use Fibs to study retracements like this here, But you can also use Fibs really handily to give you upside targets if we break out of our trading range. And we'll get to this more later, but I think this 157.52 level is really important for the market. And so you notice that I have a horizontal line drawn off of that, and the fib retracement study that I've drawn here is off of that level as well. So the point here is that with fibs, and this is I think week oh, I'm sure all my students will probably remind me. It's week 2, week 3 of the candy store, I think. After I force you guys to eat your vegetables in part 1 of the course, we go to the candy store. And anyway, the point of the matter here is this is actually a really important extension level right here. This is what's called the golden ratio, and it's really, really important in mathematics and harmonics. The simple message here is that this was the junior Bush top and the meltdown. This is where they basically recaptured that entire bear market, and this point here, the break of to new highs, was a bullish resolution away from that trading range, and so we can start thinking extensions. And 161, the golden ratio, is an extension level that we often see hit. That's actually a pretty important extension level. And you'll notice that, people are talking about the stock market being in a trading range. And you'll notice that basically we ran up. And I remember this day. It was a really odd day in the stock market. In fact, if we go and look at the, I think I have the daily chart on here. This is from December 2014. So let's go back to the dailies. And I got to watch the clock here. I'm not allowed to go over 15, 20 minutes. So it's the top of the hour now. I've been talking for about 5 minutes, so we'll go another 10 minutes here. So you notice that this spike higher here, right? It was this massive wick, right? Just a huge wick. And that was, up there is that 161 level right up above us there, right? And you notice that the market basically worked in this trading range, and look how we ran up and just kissed that. Isn't that absolutely incredible? I don't know whether that's the extension level or not. No, I don't think so. What did we say the extension level was? 213.40. So let's go and see where that is on the dailies. Let's just throw on a horizontal line here. 213.40. There we go, somewhere around there. All right. So there's that 161 level off of the dailies, right? And look how important this top of this range has been. There it is, right? And I guess our fib study, it has one of these auto lock things on it, so it should have grabbed the high price there. Let's see, what was the high price? 113.75. Is that what we're showing here? 113.75, 113.78. There we go. And we said that 161 level was 113.40. So you saw this big wick, right? And that sort of defined the top of the range, but this 161 just could not be denied, right? And you notice that every time we get up into that area, price is rejecting. So the point of the matter, and really this purpose of this video, was just to comment on the stock market. And I kind of, in the I think the headline of this, I just said, is it really, is now the time to be a hero in the stock market? And, while I don't have an actual outright sell signal, I am getting awfully close. I mean, look how these moving averages are just, and look, isn't that interesting how the body of this candle, right? We had this wick up here and then this monstrous tail down here. The body is just sitting in what I call a moving average sandwich, right? They haven't crossed bearishly yet, but those people that have taken my course, again, this is a concept that I'm a huge fan of, and I think it's really relevant, is this concept of market structure. And so, the easiest way to think of market structure, especially when it's, sell patterns that we're worried about, is we just simply say, if you ever see the market smiling at you, it's getting ready to take your money. That simply implies that if we get a nice juicy move through these lows, right, that we'll get a very well-defined double top, right? This is a closing high. This is a closing high. This is actually what we call a bearish engulfing pattern. And, I had even counseled students that if you ever see a bearish engulfing pattern on the weekly price chart, this is a monstrously huge signal in here. So it's kind of cool that I did this video here. I didn't notice that before. Holy crap, that's monstrous. If the market can go up and recapture this high, right, and really, I mean, what the hell, break us to new highs, please. And let's have a nice close above this 1618. Then I think that we can realistically, and I know it sounds crazy, but I think it's perfectly realistic, we can see, where is it? There it is. Our next stop on the extension tour is 200%, right? 247.94. And really, that kind of makes sense to me, right? We've been in this trading range an awfully long time. I mean, really, more than a year, right? December 2014 is when we hit that high. So December 2015 will be right, it will be 1 year anniversary of this trading range as of there. So we still got a ways to go. And really, seasonally speaking, it would make more sense for the stock market to try and break out here, right? Buy when it snows kind of idea, rather than here, where this is actually, I don't know whether you guys are aware, but September is historically the worst performing month in the stock market. And I often say with my students that, all the pros, they sell in May and walk away. And so this year, there's May, big surprise. And then they're in the Hamptons right now. They don't even care about the stock market. They'll come back Labor Day weekend. Usually we crank prices down into September when these guys look at some of the lofty prices that some of these stocks have been bid up to into the summer. They just go, holy crap, look at that. Let's short the crap out of that thing. And they knock it down into September, October, right? And usually we put in some sort of W and away we go, right? Start the whole new cycle over again. So, with the proximity of our moving averages on the weekly basis, this kind of concerns me. And it concerns me so much to the point where I'd go out of my way to do a video for you guys. So be very, very careful. If the market starts smiling at you, we know that this market could be in for some trouble. It isn't yet, but it's getting awfully close. In fact, I might even come out if we get a nice move below here. And it's not a might. I will come out and actually issue a sell, a sell signal, investor sell signal. And keep in mind, the investors, they've been long from way down here, right? 124 on the S&Ps. This is ridiculous, right? We're going to have to give some of this back. We are. Now, this sort of brings us to the second part of the conversation, and that is, if I'm going to be looking for corrections in the U.S. stock market, where are some likely sort of stopping points? This high, this breakout to new historic highs, I think, is kind of a function of the QE program. And I don't think you can take the QE program back. The US dollar, and really to all intents and purposes, the world's currency system, has been massively diluted. The value of the US dollar has dropped dramatically. Keep in mind that in year 2000, just back here, the US dollar index was like 125, right? 120, 125. US dollar index now is about, what is it, about 70, 80, somewhere in there, right? So the US dollar has been devalued, no doubt about it. And then we look at, and this is sort of what brings me to the second part of the conversation and why I think this pivot low is so important. The question is, what was it that actually pushed these markets to new all-time highs? And is it realistic that maybe we have to give a bit of that back. So that brings me to sort of the second part of the conversation, and that is this Apple computers. Keep in mind, I've been playing this game so long, right? I remember very distinctly. In fact, I remember, I can still see the image in my brain of Dr. Hans Block. And man, one smart dude who is just loading the boat on Apple Computer as of here. On a on a split adjusted basis, $1.95. And I remember all through this period, he would come on Nightly Business Report, which is a great TV program out of the United States, the public broadcasting. It's been corrupted a bit lately because it's owned by CNBC now, and frankly, I'm really disappointed in the way the U.S. Public television system is operated. It's, basically the corporations have taken over the United States, but that's another conversation for another day. So the point of the matter was, when price backed up against, I guess, these lows, he got really, really interested in Apple, and and I remember he would just come out on a daily basis, not daily, but, he would appear on the show maybe like once a month or so. Or once every couple months, and he would be like, what are they buying? So I'm buying Apple, right? And of course, I think this was around the time when Steve Jobs came back on the scene. So, keep in mind that that's when the smart money was buying into Apple. Okay. So, and that's like $2 a share. Maybe, let's give them $5 a share. Here we are now at $120 a share. And keep in mind, this thing's been split, so many times, right? If we look at the chart, of course, there is that entry down there. And, there's a very good looking little double bottom right here as well, right? So, I mean, you could argue after this blow off top, this was, of course, the financial crisis. So our next bottom that came in out of the financial crisis was back there. And that sort of corresponds, when we look at our S&P 500 chart, there was the turn out of the financial crisis in the stock market, right? In our moving average crossover system there. The point that I'm trying to get to here, and I apologize if I'm taking too much time, is, the stock had a beautiful, run up here. People made lots of money, and then it just got whacked, right? And, a huge concept that we teach in the course, the exact opposite of the market smiling at you, right? Here's our smile. And really all the smile is just a double top breakdown, right? The opposite, and this is of course bearish, right? The opposite of that is the W, right? Where basically the market comes down, rallies away, comes back down and tests, and moves through this point, and there's your buy signal. And lo and behold, look on Apple, right? Beautiful W. I mean, you literally couldn't write this any better. Nice, this is a harami, beautiful textbook candlestick pattern. Traders would just love this harami right here. The fact that the market came right back down to the lows and tested the lows and then reversed, nice fractal right here. And then, of course, there's the double bottom, right? And you can see the subsequent price performance, right? Another little double bottom right in here. I don't really see well-defined M's until, here we are, right? And what concerns me about this is not only is this an M, and it's interesting, those people that watch that Bitcoin fractal video that I did yesterday, this is actually a fairly well-defined head and shoulders, right? Where it actually goes, and then like that, right? So we went up, down, up, little top in there, down, up, see you later. Very, very nasty, right? I mean, you could argue that there's your big smile, and we all know what happens when the market starts to smile at you, right? So this is basically one of the market darlings, right, that drove this breakout. And, if we look at the U.S. stock market and ask ourselves, what was it that drove the market through these all-time highs and into this new trading range, right? The extension. It was, and let's put a nice horizontal line on this, right? Vertical, excuse me, right there. It was, and you'll notice, right? I'll take my mouse right there. Boom. It was the bottom in darlings like Apple, right? Apple face rip, part of the Dow now, right? Huge, basically component. This rally is this breakout. And of course, if Apple goes, then that means Google and a whole bunch of other tech stocks and stuff. But the long and short of it is Apple was the big leader, right? And this catalyst of the breakout was what sort of propelled the stock market to such massive rallies. And we can sit here and debate the semantics of it. Hopefully you're just getting the simple message of this market structure turn and how this as a weighting. Look at our beautiful moving average turn here. That's not the case now. And if we want further upside appreciation in the US stock market, and these were the reasons why the market was breaking out, this thing needs to be bullish for US stocks to move higher. And really, if we look at our moving average relationship, keep in mind this is a weekly chart. These are pretty slow signals, right? So if this thing's not moving up, where is it most likely to come back to? I think that this level right in here becomes hugely significant, right? This is not only what we call horizontal support and resistance, right? Which is another weekend we do in our level 2 program into the candy store. You can see that when price went up into this area originally, there was enough supply that it overwhelmed demand, right? And they brought price away. They pushed through it and then boom, right back to this level. And we often say what once can be resistance is now support, right? What a coincidence, and this is sort of the second point, is that it lines up perfectly with our good old first stop target. And those people that have taken the course, of course, and people that have followed me historically, this is a concept where you can use the fibs that has absolutely nothing to do with these levels down here that people actually accuse. Well, I won't go there. The point of the matter here is this is actually a concept by a gentleman by the name of Ray Burchett. And he taught me the importance of 38.2. I think that, as the horizontal support and resistance, this is also, a significant high right up in here. So clearly, if I was looking for sort of some downside objectives through this, I'm getting a lot of messages that this is a very likely area, right? And lo and behold, right here is what we call a BFRN, or a big fat round number. Hopefully you guys can appreciate that $100 a share is going to be a really big psychological magnet. And it becomes a magnet not only for people that are thinking short, but also people that are thinking long, right? I bet you there's a lot of people off of this, when it was 120, 130, that just simply said, if it ever comes back to $100 a share, I'm so going to buy this, right? So the point that I would just make is that, and really, we're thinking about the US stock market. Frank, for a guy like me, I can't even think about buying Apple Computer here, right? This has just got dangerous written all over it. And this was one of the market leaders that propelled the US stock market lower. My hunch here is maybe like into September, Labor Day kind of idea. We come down and bottom off of that important 38.2. But then I could see kind of in a head and shoulders type pattern, we actually rally back up, and you notice there's a little bit of a gap here, right? We could actually rally back up, maybe fill in the gap, but what this counter trend rally does and you guys need to understand this, is that institutions, big players, they can't chase price down in here to sell. What they will do is they'll actually wait for some sort of bottom to come in. They'll wait for the counter trend rally, and they'll just have their open orders sitting, right at this fail level. I could very easily see just a whole bunch of orders just parked right in there. And lo and behold, like we said, there's this big juicy gap that's also going to act as a major barrier. So if we put these sort of levels together, what ends up happening is we actually get sort of like a trading window. And so for those that are actually short-term trading Apple, I really wouldn't have a problem if you targeted maybe a test of these lows, and you're going to work your stop against these lows, right? Maybe target long ideas somewhere in there. Conversely, right, now that we put in this low here, I still think we need to work our way lower. But I could very easily see, and it would be perfectly fine by me, is that you're going to target this box up here, and you're simply going to risk to new all-time highs as a shorting window, right? So, that's how I would, approach Apple Computer right now. But really, what I'm more concerned with is the actual message of the market. And this is sort of how I guess I'll finish off this video, is that the previous market darling leader, and oh boy, was this ever just a fantastic buy signal right in here. Big buy signal here, and look how when price actually came back down to that level, the bulls just simply said, all right, let's load up the boat, boys, right? And away she goes. And this is also a cool thing about what I do, guys, is that, and I saw this happen on an altcoin recently. I've seen, this, it doesn't really matter what asset you're trading, is again, there's the confirmation of the signal. And if the thing just takes off, well, too damn bad you missed it, right? But if you had just put your order in at the appropriate level and identified your risk down to new lows, you just let the market work, and boom, you would have gotten a fill 1, 2, 3, 4, 5 weeks later, a month later, would have given. Actually, it looks like you might have been filled here, right? So these levels are perfectly valid, and quite often over time, it's not like oh man, I missed this level, I missed the trade, it's gone. That actually very rarely happens. Most times we actually get a check of the level. So the point here is that my feeling is, again, Apple here to me looks like a broken stock. There's something fundamentally wrong with this. For those that are traders, I really like the idea of focusing on this window, and maybe we get some sort of blow off top. My hunch is this gap is going to be a major, major brick wall. But hunt this area for short setups off the dailies. And for those that are hunting longs, the short-term traders, target a test of this area and the big fat round number, right, to set up long ideas. We're kind of stuck in a little bit of a void here, right? And, considering what's going on in China, and really you could argue Apple to a certain degree is a China proxy, it kind of makes sense why. Now, for investors, right, I really can't even consider getting into the Apple story until we get down into this area. Now, notice the proximity to this key low, right, and this trading range high in that zone, right? So my feeling is if I was an investor, first and foremost, we have a really nasty time of year coming up here, right? I often tweet, they don't call it the fall for nothing, right? But there's October. Usually we get some sort of psychological bottom in November. And then the cliche that Ray Burchett taught me a long time ago, a famous Canadian market technician, is you want to buy when it snows and then probably look to sell when it goes. April, May, June of next year. I could very easily see some sort of scenario like that. If all hell breaks loose, and you never know in the markets, I could very easily see us tank right back down into this support zone right in here. And maybe, just maybe, we might even test the original double bottom lows, right? Which would actually set up a window down in here. The long and short of it here is, and the purpose of today's message, this is a weekly chart, keep in mind. This story has rolled over, and we're getting some pretty nasty signals here. So if we look at the US stock market again, right, as measured by something like the S&P 500, the market darlings are in trouble. And if the market darlings are in trouble, this scares me. So we haven't got an outright sell signal here, but unless Apple can really clean itself up, or, maybe we have some great capitulation that happens overnight before the US stock market opens, and the market gets happy again, and the S&Ps can break to new highs here, which really isn't that far away. I mean, really, on balance, there's no reason for a trader to even think about anything in here unless you're just scalping, intraday kind of crap. Let the market close above this 161. My hunch is we're right on the precipice of potentially getting an investor sell signal here on the US stock market. We haven't been in this situation for a very, very long time. And I don't think, the average investor can even remember being in stocks. And believe it or not, this is actually the typical life cycle of a market, right? Where this, 2007, people are like, what? That's like 8 years ago, Brian. I can't remember what the hell I was doing 8 years ago, right? And, over the past, 4 years, we've gotten very comfortable in a one-way market. I'm not saying it's broken yet, but I am saying this has the potential for trouble. Keep abreast of my tweets. Obviously, site members. We have a really cool site, and actually, we're building out a brand new site. But basically, I will let the public know. I've got my Twitter feed. You can always follow that. And of course, if you're interested in the school, you can always pop in and get more information about the school. Just, check out my tweets. I've been tweeting away about the school and stuff here today. So my Twitter feed, just so you understand that, is the Rational Investor. What is it? It's at CR Investor. Yeah, at CR Investor, capital I. So, take a look at that when you get a moment. And at the very least, follow me on Twitter. I think that's probably a good idea. And at the very most, if you want to sort of, really jump in to learn how to really use this stuff and understand why I'm so concerned up here, then maybe you and I should chat a bit more. Feel free to PM me. We have a free trading room, a chat room on TradingView. That's this room right here. And if you want to pop in, this is TradingView if you're not familiar with it. Our chat room is right here. And as you can see, I sort of chit-chatting away with different people through the day. So why don't we leave the video there? You have yourselves a great day. All the best. And any questions? Of course, I think I've given you lots of stuff to chew on here, so I'm sure you're going to have lots of questions. Feel free to either respond to this YouTube video or, follow all the different stuff that I suggested you look at before. All right, everybody have yourself a great day. All the best, and bye for now.